Good morning, traders. We write Thursday, 3rd of July. Welcome to another Flow Show where we will talk about everything that's going on in this wonderful world. Um, Ryan will be back with us tomorrow, I think. He's got a bit of a family things to sort out, and he should be back with us tomorrow. So there's nothing. It won't be far away or long away for long, I think. Before we start, again, let me remind you that we have our 30% off of the trader funding accounts programs. You can obviously choose between going for an assessment to get then funded live or straight away go into a live funded account. You get 30% of everything. And when you join, you will also be entitled to a one-on-one onboarding with Blake, our president, explaining all the ins and outs of this trading funded program. And also, while you take your assessment or you join us for our live account, depending on which account you take, you will also get access to our wonderful trading community where all like-minded traders are helping each other out every day. Then also, we still have um, our announcement here that something is going to change pretty soon. We are going to evolve in trading analytics. So for those who have not yet put their name or email address in the boxes here to subscribe to our newsletter to be aware of every change that will happen and a few perks coming your way potentially. Um, just don't hesitate, do it now. No need to do it several times, only once, and it will be enough to be on our newsletter list and to be aware of everything that's going on in here. Also, we have our non-farm payrolls competition ongoing, for which I will put the link in the chat room right now. There we go, in the chat room, so you can put in your guesses. Let me pull out that page quickly. Put in your guesses here. This is the competition. Only guesses on the original tweet will count. So any reposts, any retweets will not, answers to retweets will not be taken into account. Only guesses onto the original post will be taken into account. Okay, that was it for the trailers. Now let's get on with the show. But before I start, really with what was going on, I just want to take a second. For all the people in the UK and all the Liverpool fans, we've had some sad news that Diogo Jota, one of the strikers of the Liverpool, just died in a car accident this morning together with his brother. Is just the poor guy was just married for a few days and he's leaving a family with 3 kids behind. So all our thoughts and prayers are with the whole family and all the friends over there. Right. Um, just wanted to say this because life is short and we should make the best of it at all times. Okay, this being said, let's move over to the headlines of the night yesterday and what is to be expected for the rest of today. It's of course going to be a big day today with the US jobs reports coming out. But first of all, let's go over a few headlines, and most of them are, as usual, being political of nature. First of all, um, it seems that the big beautiful bill is still held up in the air in the U.S. House, unless I missed a line and they finally voted it through. So the House of Reps they are still debating to get the bill through. So we're still waiting for that to be confirmed or infirmed in turn. Also, yesterday there was a bit of a victory lap on the US side. They made their first deal with an Asian country. Vietnam, namely, but where Vietnam, let's say, escaped the worst potential tariffs, those 46 or whatever percent, they are still going to pay quite a lot of tariffs on their direct exports to the United States, being 20%, which is more than the 10% global reciprocal tariffs. They're also going to pay 40% on transit of goods into the US, which would transit via Vietnam. So that's still pretty hefty taxes there. But it is a first, so there's been a bit of a victory laps being done over there. Further on trade, the US has lifted export license requirements for chip design software sales in China. So that's a bit of a give back there to China in the hope that they can finally start to really talk about a trade agreement with China. I don't think that for China in particular, the EU may be in the same boat that the 9th of July deadline will be a strict one. Although there will be a lot of chest beating going on, and the 9th of July being trying to be kept as a deadline, I sincerely doubt that with those two bigger blocks we will have a final answer, or at least a big, beautiful trade deal with them by the deadline. Europeans have also been tightening the leash a bit, and don't want to give back too much to the US either. So that puts that deadline, I would say, a bit at risk as well. Um, Staying in the EU, apparently some of the call them rebels, call them adversaries of von der Leyen, are trying to put a no confidence vote into the European Parliament. It is supposed to be a symbolic one, as the majority of the political groups have already said that they would not support the motion of the no confidence vote. But never say never, okay? So we leave the outright. Oh, the House passed it. Thank you, Stephen. I really missed that one today. Thank you very much. I was busy on other stuff. So the House passed the big beautiful bill. So that is news. When did that come out? Did I really miss that earlier today? Yeah. Anyway, thanks very much, Stephen. That's very helpful. But back to von der Leyen. It's supposed to be symbolic, as I said. But oh, here goes Galaxy and says they didn't. We know that the first step was done, but I still thought as well that they were still discussing it during the night over there in the US. Okay, let's see what comes out of that a bit later. Then it's not that the market is particularly trading this. There's hotter stuff going on in the markets right now. Okay, back to von der Leyen. If there would be this outright risk that the no confidence vote would come to pass, it would create a big mess in European Parliament, because it would entail the resignation of the whole EU Commission that she's leading, which would see 27 new appointments needed to be made, and we can safely say that being Europe, it's not going to be an easy one to do so. But let's keep to the assumption that the motion is not even going to be taken. Okay. A few minutes ago, we did have a bit of comments from German Chancellor Merz as well, and that's where also we can think that a trade deal is still pretty far off between the US and the EU. He was pretty bellicose with his statement, saying that they will do everything to keep the United States on side, but have to be prepared that American engagement in Europe will be lower. He says we don't want our data to be stored in the US or China. US is pushing us into ever more banking regulation, but then does not apply these rules to itself, so we need to rethink. He said there should be a quick resolution, but it could be lasting for months. So that's where we are. But with the EU-US trade situation, it's still not a done thing, as we can see from these comments. Okay, there's been a bit of a shake in the market regarding oil last night as well. Iran supposedly having made or were making plans to litter the Strait of Hormuz, and we know how important that is for oil shipping. To litter the Strait of Hormuz with naval mines. So that was the latest one in the developments over there in the Middle East. We saw pretty big bounce in crude oil up to nearly 68 bucks. But we're already cooling off again now, trading somewhere in the $66 area as we speak. Um, Moving over to Japan. We've had comments from one of the BOJ members, Takata, overnight saying that the complicated US-Japan trade situation is holding them back for now, keeping them on the flexible side regarding um, monetary policy. But if this uncertainty would be removed, they should resume the rate hikes after this pause. So he's one of those still pushing for rate hikes. And if we look at the final Ringo tally that we had out a while ago in regards to wage hikes for the fiscal year 2025, the final 2024, 2025. The final tally comes in at 5.25% versus the prior one of 5.1%. So this is pretty good news for the Bank of Japan and for the hikers at least. That could mean that if we get all this uncertainty out of the way, which is not sure yet, because we know about the difficulties that the US and Japan are having to find a middle way and find an agreement right now. If they would find a solution, we can expect the Bank of Japan to start hiking rates again. Right, this is it for the overnight headlines. Let's look at what happened yesterday. And of course, the shocker of yesterday after that prior day JOLTS report, which was looking quite a bit better, but which analysts were doubting about the viability of this big job opening jump. We had the complete opposite in yesterday's ADP report. It went into negative territory, and where the job openings showed us bigger demand for leisure and health services, and that was actually where the ADP report showed the biggest drop. So again, it is not a guarantee for the NFP report, which comes out today. It's a different report. But the market is now obviously looking at whether the NFPs are finally going to start to confirm a cooling down in the US jobs market, where we were rather expecting the biggest numbers or biggest drop off in numbers to show up from August, September. Obviously, this is now making today's jobs report, especially coming before a long weekend, before the 4th of July holiday in the US, making a very, very hot report. So today is really going to be scrutinized, because if we get, and it probably be quite a report that is going to be either relatively bullish or bearish for the dollars. Because if we get a report that holds up better the market is going to have to reprice again what it did yesterday. That is to start to price in a bigger percentage chance of a July cut by the Fed. But if we get a weak report, the dollar pairs will probably continue to chew that bone. We heard a lot about rebalancing out of the US dollar. I suppose that some of the rebalancers have been pausing a little bit, as we can see over the past two sessions, the dollar stabilizing somewhat. But if they get an anticipated weak jobs report today, they will probably continue to rebalance some of those holdings out of the US dollar. Speaking of those holdings about US dollars, I also saw an article that the FX options market has seen a pretty big increase in volume lately because European corporates are also wanting protection against whatever receivables they will have in dollars. So they have materially increased their use of FX options, which is keeping the volatility relatively supported. It's not overly high right now. Let me just have a quick look at where the options are. We are still on an 8.5% level for the 1 month, sorry, at the monies, but in quiet markets and even in trendy markets, even if you would have a trend in a currency, but if it would be like a very slow trend, you would rather be trading in the sevens or even in the 6% bracket. We are still trading 8.5% there. So that is showing us that there's still quite a bit of activity in the FX options market. Okay, that was for the ADP and the NFP. I will come back to the NFP, don't worry. We saw a surprise built in the crude oil inventories yesterday. That was putting a bit of pressure again. We were trading then rather in the 65 on the 65 handle, but we had that Iran headline afterwards pushing oil higher. But if you look at what's happening in the oil market in general, take away the stress factor that there would be possible in the Strait of Hormuz, all those spikes in oil have rapidly seen a resumption of the downtrend right afterwards. Okay, moving over to what has happened today. It is services PMI day. Aussie printed a decent services PMI there. It's rather reflected in how Aussie Kiwi is trading right now than really Aussie versus dollar, because for obvious reasons, the dollar side is clearly waiting for what's going to happen on the NFPs later today. Then we saw the Japanese services PMI being relatively okay as well, but we can't really see that in the level of the Japanese yen, as we can see, and I've been talking about that quite often lately. Rather than the dollar yen, the crosses versus yen are holding up pretty well, which are in turn supportive as well for the dollar yen. There, I really think it's going to depend on whether they get a trade deal before the 9th or on the 9th of July. We know that Akazawa is going back to the US this weekend, so it's going to be very important for yen there. Really, personally, I'm not going to trade too much of the dollar yen on the US NFP report today. I'd rather trade different currency pairs, different dollar pairs, because there is still so much up in the air regarding this US-Japan trade deal. Slightly weaker Caixin services in China, but still above the 50 line. We saw here then a pretty decent Swedish number. But we know that Sweden and the Swedish krona is struggling with other worries right now. They also are having like pretty low interest rates over there. We saw a bit of bit of a comeback in the Swiss CPI. Swiss franc strengthened, what, 0.2% before giving it back. Um, and we're still trading very, very low numbers there. So I wouldn't really see a trade in there as well. Then we move over to the European services PMIs. Spain still doing pretty okay. Italy gave back a little bit, but we are still comfortably above the 50 line. And then France final, German final, European final. They're all crawling back. Okay, France and Germany, the services are still below the 50 line, but they are crawling gradually back up to that expansionary, let's say, 50 line, which is taken by the markets as relatively positive when we look at how the European crosses are rather behaving. The dollar side of things will be decided this afternoon, of course. Um, Sterling, yeah, of course. This was before the whole Reeves and fiscal saga. Yesterday, that report, those numbers were taken before, but still, it's doing pretty okay. So we saw a bit of a support coming in, relative support in the sterling. I will talk about what's happened yesterday in sterling, obviously, when we look at the rates later on. Okay, that being done. Here, the NFP. So, as I was already saying, we were expecting a material drop, especially those government jobs losses being shown in August, September. We were still hanging in the balance for when the rest of the jobs report will start to show weakness. We did see yesterday, by the way, that Microsoft is planning to lay off another 9,000 workers. There's been quite a bit layoffs since the end of last year, start of this year. So is it going to show today? Finally, we're expecting an 111K print, which is actually my latest month's guesses on our NFP competition. But after that, yesterday's NFP ADP, sorry, which I repeat is not necessarily a front runner for the NFPs. The market is now expecting a weaker report. Okay, so that would put the better than expected result in this report in the surprise bracket. Okay, I mean, if we get a report that defies the laws of gravity, for instance, if we get even at expectations or slightly higher, and with an unemployment rate that would even show this uptick to 4.3, but assuming that it comes out at 4.2% again, the dollar is probably going to gain a bit of strength this afternoon because now the market is expecting a weaker report. But again, if we would get that weaker report, we know that the market and especially asset managers, money managers, central banks are in a reallocation process of getting out of some of their dollar holdings, not all of them, but some of their dollar holdings, and expecting other currencies or gold or whatever to do better than the dollar for a certain period. They will have that bone firmly in their mouth again, and I think we could see that other leg lower in the dollar. We will also have the final S&P Global Services PMIs out of the US. It's a final reading. We have seen from the Europeans that we can get a little bit of a surprise there, but really everything is going to be based on the NFPs. The durables are not really going to do much. The only thing here which could be a kicker for some of the moves would be a surprise in line with a surprise on the NFP, and really, I unless it really comes out really far away from expectations, the ISM today is taking a step back versus the jobs report, of course. If we get though a confirmation whether it be worse or better of what the jobs report is showing us, that could give an extra boost or an extra weight, be an extra weight around the dollar shoulder. So don't completely dismiss this one. I would say watch the ISM above anything that goes on durables and the S&P Global. But still, the jobs report is going to be the more important one of the two, of course. Rates. What is it going to do with the currencies? Okay. So for the time being, technically, we are just in a consolidation here. We have seen those steps higher in the euro dollar, and we stayed in consolidation zone even this morning on the move up. The euro dollar probably on the back of expectations of that weaker NFP report and also slightly better PMI, sorry, in the eurozone. With a retest of the 118.10, couldn't reach the prior high, but we have clear intraday levels and clearer outside levels as well. So to start with the intraday, once 118, 20, 30, that's going to be the zone to watch. If we break above there, I think we are going to have a move up to 119, 1030 at least. Go and have a look at where the top end of this channel will be. It's a bit, yeah, okay, it's still in the high 118s, but as I said, if we get a really weak report, the bears will chew on the bone, I think, and we get higher. If we get in turn a strong report, I expect this one to be tested and likely, depending on how strong we come out. Let's say that we print 150k or above. I think this 117.45.50, which held very nicely yesterday, is going to be toast, and we could be on our way back to 116s, 116.80 or a bit lower. It all depends to what degree the NFP report would beat the expectations for today. Okay. If we get a really weak one, then I think the market will start to eye this trend line that we have here, which is also the 88.6 of the whole move from 123 down to 95s. It all comes in at around 120 and a quarter. If the report is really bad, I think in the few sessions to come, perhaps even because we have a long weekend, the market will be much more nervous, and we could see this outside move. We could be on our way to 120. That's what I expect anyway. My overall bias for the time being is has still not changed. And there was also an additional, and I forgot to mention that there was also an additional stress point for Mr. Powell yesterday, is that the FHFA boss, what's his name, Bill Pulte, has asked for Mr. Powell to be investigated by Congress because he would have lied about refurbishing the Fed's headquarters in Washington, and the price of it and what they really want to do over there. And of course, Mr. Trump didn't miss the opportunity to say that how did he call him? Mr. Too Late should be investigated by Congress. If we really get a weak NFP report, I think all of this combined should continue to weigh on the dollar. But let's get the numbers out of it first of all. Okay. Moving over to the sterling and yesterday's debacle. It was, let me even go on maybe even a shorter time frame, because this was the Reeves shedding a tear moment in British Parliament, when Mr. Starmer did not, in so many words, support her. We know that there's been a few U-turns on welfare, and etc. The market really worried now about the fiscal situation, and even if there would be a post-Reeves coming. In the meantime, Starmer reaffirmed his support for Reeves and saying that she won't be gone for a long time. But even so, the market started to price in what may happen when or if Reeves would be booted, and the sterling really had a very tough moment here. We've already been talking about that, how that would affect the sterling. Giving back support has seen already a bit of a recovery here in the sterling, but I'd argue this one is not out of the woods. Um, if we would get a stronger report this afternoon, this would be probably one of the candidates to get another slap because of the fragile nature of the sterling right now. Um, we are turning around this trend line here. We are turning around the recovery high as well. So I would call it, in fact, technically or so, we would be around somewhere neutral. But really, if we would get a stronger than expected jobs report, I think cable would be a candidate to retest at least what's happening in this 135, 80, 90 zone. Uh, Perhaps potentially, depending on the beat, go back to low 135s around the 135, 1030, which has been also an interesting zone traded over the past session. So this one, I would say, if we get a strong US report, would probably move down faster than the euro. If in turn we get a weak report and we get a move back up here, that will be the real test. That will be the real test because as 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 hard as a market can dislike a currency, it's also the case that as we have seen so often in the past, that the markets are suffering from collective Alzheimer. But this would be the real test. It has to be a really weak one in the US for this to be broken this time, I suppose. And looking at the main cross in the sterling, so we've seen a fly through of the resistance around 86, 86.15 on the Reeves tiers moment. We've shot above the 78.6 of the April May decline in euro sterling, which is around 86.55, and I think that's going to be our barometer now for more jitters in sterling or more concerns about the fiscal, about Reeves' position, about who is going to be who might be the nominee afterwards. We had a pretty long discussion about that in our chat room yesterday. For those who are not in our chat room, we are talking about those things day in day out, obviously, and we had a pretty long discussion about it in the afternoon. And even though there's a few names coming out of the hat who could potentially replace Reeves, we were at a lot of pain to find anyone who actually could do a decent job and who could actually take better care of the fiscal situation over there, led by the Labour government. So in any case, if this pair would come back down here to this 86, call it 0515 zone, I would expect that we find some support right now. If in turn the situation sours again, watch for a renewed break above 86.55, because that could mean that we are on our way to higher levels again. One thing that we need to take really pay really close attention to is the gilt market. I'm only having the 10 on. I have another screen which is showing something more interesting. Is the gilt market, because every time that there is stress, and remember 2022, but every time that there is stress in the UK fiscal situation, the gilt market is the first one to drop. And if you can see here, we also made it back to somewhere midway of where we saw the drop from yesterday. And then you look at the cable. The cable is really following gilts. Gilts are really the driver of the sterling market right now. So if you want to know what's going on, or if you want to see why sterling is getting up or down, the gilt market is really the one where stress or relaxation of stress factors is going to be seen first right now. Okay, so keep a very, very close eye on what's happening in the UK gilt market. Okay, guys, this is just an additional little thing that you should be watching. Okay, rest of the currencies. It for the Aussie, it's relatively clear too. Yesterday on the correction that we saw in the dollars, we went back into this 40-50 zone and it held on the Aussie. So that's an interesting watch. And as I also said, in case we would get like a really good report, watch what's happening around 65 the figure. Topside equally relatively straightforward. We're talking about 65, 90, 65 the figure. If you would get down there, through there on a week report, look for a confirmation through 66 and a quarter. If that would go, then I think we are going to be trading relatively quickly back into the 66.80, 67 and a quarter zone, where we have to start to think about this move, I think, okay? If we get up there, because I move back up there in the Aussie, and then I'm coming back to the euro. If you take the move, the amplitude of the move in the Aussie, you assuming that we get up to 66.80, 67 and a quarter, that's about a 2% move from where we are now. And look at where the euro dollar will probably be trading. It's also relatively close to a 2% move. And we are going to find this back in a lot of pairs which have been trading close to each other in the last like month or so. They're all looking at relatively the same kind of picture. Okay, on the Kiwi, we are a little bit further away because the Aussie Kiwi is trading a bit higher. But here we are looking at what's happening in the 61 zone, 61, 61, 10 zone, which is also the top of the wedge. If we get a break, and then you're talking about levels perhaps somewhere around here, the long-term 61.8, around 62.30, that's also going to be about a 2% move, okay? And we can even, but this is a little less obvious, we can even look at the dollar MEX, for instance, which is in also a corrective phase for the time being. We're stopping right on the first resistance here. But assume that we stop around 1880, 1882, and then we come back to the longer term where we are looking at a move down into the 18 and a halves. Make the calculation. It's a little more, it's a little less, but it's also not too far away. It's somewhere between 1.5% and 2% move as well. So it's something that I've been noticing while preparing the show today, is that we could have like relatively clean parallel moves in quite a few of the currencies. Okay, looking back at the yen quickly, and then I'm going to look at what their edge was. Gold and silver. Gold and silver are relatively interesting. At the dollar yen, as I said, I'm not a big fan of trading dollar yen. Obviously, it will move because it's a volatile pair and it will move in line with the dollar. But the surprise trade here would be a better report, and then I think those 144 and a quarter, 144 and a half could be toast for a retest of the 145.30 area. Okay, and then we will have to see how good the report really was, or how long the market will want to trade it. Get a week report. I trust we are going to have a retest of 142.80, perhaps even low 142s, and then it will be decision time really around those levels, 141.80, 142 and a half on the dollar yen. But I just want to remind you about how, and I'm not going to go into details, but how big this euro yen is, and we can find it back in a lot of crosses. They are relatively steadily beat. I mean, without breaking fresh highs, but they are still relatively beat. And that is the US Japan trade uncertainty effect. Okay, so always keep an eye on what's happening in the European in the yen crosses. Okay, because for instance, if you would get a really good report, the dollar yen could really shoot maybe a bit faster than the rest, because a really good report will probably support the S&P, will probably support risk as well. And that in turn is going to support again the yen crosses in all likelihood. Okay, gold was holding, gold is holding. We are waiting for the NFP report, but again, I think we also wait for what's going to happen on the US with everybody's trade results for the 9th of July, but it's holding, it's holding. 33 30s, 33 and a quarter before we talk again about lower levels, 32.90 if you would get a surprisingly strong report. If you get a very weak report, keep a very close eye on what's happening again in this 33 70s, okay, because it's been a zone that has been traded very, very often, and it's very often been a zone where the market stopped for a pause, rethinking, breaking it broke quite significantly higher. So keep an eye on this one for the probably the hinge on the top side. If it goes, we could be relatively rapidly trading $34 again. The one that is I find interesting is now we're just shying back a little bit. I don't know exactly why, if we have had any fresh headlines, but I haven't seen it in the meantime. We just gave back about 30-40 cents there on silver. But we traded above, but we're trading again around this zone here, 36.85, which I'm keeping a close eye on. But again, it's holding very well. This one is not going to need too much of a, let's call it lower yields on the US, perhaps, if that's the result of what's happening today. I know that it should have better economic outlook, and so to overpower gold. But just repeating what's happened here over the past 2 weeks, or over the past month, actually, every time we came back into the 35s, it's been holding, and this thing it's not going to need much to get up to the prior high, and likely if we get over there, 38 and a half. I don't want to dream about the real long-term situation yet, going back into the 40s, but just want to reiterate the importance of that 34.80, 35.15 that we broke, and every time we get back into the 35s, this is a weekly, by the way, is getting bought again. So this overall, this global outlook is still very, very bullish for silver for those who are trading it. Right. I think I've said most of what I wanted to say today, and maybe finish with the last one. I was showing you this zone here, 137, 138, and yesterday, as a matter of fact, the Canadian dollar started to show a bit of strength again, and it's still trading just below 136. Let me just put it back up a bit clearer. I just want to get back onto the daily. What I showed here, this big zone all the time. We're still not ruling out, I think, a move back into the low 34s. If we get a confirmation today through that prior low here, 135 3/4, on a weaker US job report, it could be that is the signal for the move that we might be seeing 134s again. Obviously, opposite is also true. If we get a strong report, 136 and a half to be monitored again, and then a move back up perhaps into those low 137s. But again, to me, for as long as it does not break back up above this zone, I am not looking for a major return higher in the dollar CAD. If it breaks in turn, then I think it's probably time to look for a more pronounced medium-term upside again. Brand, the lira ruble. Oh yeah, the famous one. Let's reflect on the lira ruble for a few months and then see where we can how we can talk about it. Okay, folks, thanks very much for being with me. As I said, I think even despite the US holiday, we will have a flow show tomorrow because we are open. Thanks you very much for being with us again today. Don't forget to cast your guesses on the original tweet, on the original post, in order to be to have a chance to win fabulous prizes again this month. And for the winners, we see each other in the chat room. For those who are with us all the time, thank you very much for being with us in our community. And for those who are not yet in our community, what are you waiting for? Have a very good NFP day. We speak again tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.